Welcome to Central Bank Central. I'm Kathleen Hayes. Well, no surprises from the European Central Bank today as the Governing Council met and held their key rate steady for the fifth straight month as inflation eased again and the euro continued to strengthen. Plenty of food for thought, though, as Christine Lagarde said once again that Europe's economy is in a good place. The ECB is watching the economic data, going meeting by meeting, and ready to move if and when needed. So I'm very happy to welcome back Vitor Constancio. He's former vice president of the European Central Bank, former minister of finance in Portugal, and also formerly the governor of Portugal's central bank. So, Vitor, I want to start with the meeting today. And then I want to take a look. We will cover that. And then I want to take a look at a piece on your Substack, Macro Views. That's the name of it. And you very in depth. You're looking at seismic shifts in global geopolitics under the Trump administration and what this and mean more for Europe. But let's get right
Yeah.
to Christine Lagarde. Three policy rates, the three main rates kept steady today. They were seen as mostly balanced risk when it comes to inflation and growth, and expectations for the ECB, of the ECB, to reach their 2% target. So, do you agree with what President Lagarde said, how she characterized the economy, what she expects?
Yes, of course, because it has been really no news about economic developments in Europe in the past few months, and in particular regarding inflation, although the reading for inflation for January, the flash estimate, gave only 1.7, which is well below the 2% target. But it's just 1 month reading, so we should not take too many conclusions out of just 1 month number. But it's also in line with what is the forecast of the ECB for this year inflation, which is 1.9. So it's in line with a certain slight decrease compared with last year in normal times if no new shocks, of course, occur. On the other hand, the economic growth also registered for the whole year, if we now have finally the last quarter of 25, more or less around 1.4%. But although the 1.4%, which is slightly above what is the potential growth of the European economy, of the euro area economy, I should say, um, should be even slightly corrected downwards. And the ECB does that in the publication of their latest projections. They show that they show the number 1.4 for 25, but then below they show 1% only if the numbers for Ireland are corrected. As you may know, Ireland is a very special economy because it's an offshore place for many US firms. There is a lot of tax management or optimization,
There you
and
go.
that affects the GDP numbers of Ireland many times in a significant way. So let's say, for simplification, that the European economy is growing around potential. And that should continue this year, despite the envisaged slight decrease in the growth rate of world trade.
So it's Christine Lagarde and many other ECB
Mhm.
officials seem pretty comfortable with all this. The core
Mm,
inflation rate still above, 2%, I guess
yeah,
2.2 year over year.
2.2. But
Yeah.
it's the lowest since 2021.
So they're very comfortable that things are going so much in the right direction. They feel
Yeah.
good that unless something crazy happens, inflation
Yes.
is going to get
Yeah.
stay where it is, get a little bit lower. Uh,
Yeah.
uh, how do you factor in the strengthening in the euro? Christine Lagarde was very, I think, went out of her way to say, "Hey, you guys, we don't have a strengthening dollar. We've got a dollar, I mean, excuse me, a euro. We got a euro that got stronger, right? And that should be also a factor that helps both growth and inflation coming down, right?"
Yes, especially people talk about the effect on inflation, pushing it down slightly. Although we have really to be aware that normally people, when think about that, think about the exchange rate between the euro and the dollar, which has appreciated since December of 24. It has appreciated by 12.7%. It's now
Mm-hmm.
at 1.18, and it was then in 24 as at 1.03. And that's a big appreciation. But of course, what counts both for inflation and for growth in terms of the impact of exchange rates is the effective exchange rate, meaning the weighted average of the exchange rates with the main trading partners of any country. The BIS published the effective exchange rate daily, practically daily, in nominal terms, and it shows that the appreciation of the effective exchange rate of the euro against a basket of currencies of
Okay.
the main trading partners appreciated only by 6%, not by 12.7,
Okay.
which puts this evolution in the proper context. So it's not a dramatic increase that has already happened.
Mm-hmm.
And personally, I don't think that the euro will appreciate much more. Uh, it can appreciate against the dollar, but what will happen in that case, and it has been happening recently, is that the dollar is depreciating against most currencies. And so when you consider the whole set of currencies of the trading partners of the euro area, the appreciation is not so significant as seen against the dollar. This has been a
Okay.
phenomenon of dollar depreciation
Mm-hmm.
against
Sure.
most currencies and not really just against the euro.
So, labor market was another place where
Yes.
Christine Lagarde, high
Hmm.
grade for unemployment. She called it rock bottom at one point. A lot of
Hmm.
labor indicators that show more inclusiveness. That means higher participation rates.
Sure.
Wage inflation consistent with the ECB 2% targets. Do look that way to you too? Do you see any risks, or is it full speed
Well,
ahead?
yeah, no, the wage growth has been decelerating throughout 25 and is predicted by the indicator that the ECB built of the so-called wage tracker, which is a forward-looking consequence of the contracts, labor contracts already done, and that points to a 3% increase of wages in 26, which, taking into account the growth rate slightly above 1 and therefore productivity, it's in fact in line with an inflation rate around 2%. In fact, everything seems to converge to a good scenario, relatively good, because of course these growth rates are low, although they correspond to the potential growth of the euro area, because as you know, our active population is already decreasing, and productivity in this period has not been very buoyant, which then implies that the potential growth rate is slightly above 1% only. So it's at potential. It's not very buoyant, but it's compatible with the target of 2% inflation.
Okay. Well, so I would say I don't even have
And
to ask
that's
you,
why,
Dave.
if I may
Oh,
conclude, and that's
yeah.
why the markets and everyone else predicts that the ECB will not change interest rates throughout the whole year of 26.
Yeah. Yeah.
And I
Well,
concur. I concur with that prediction. Well, of course, except if there are unexpected shocks of any kind.
hmm Yeah, and so I'm not even going to ask you if you agree with her that the economy is in a good place because I think you're saying that, and let me get a little bit more into this about
Yeah.
the trajectory of Europe and where it's going.
Mm.
And so another thing during the press conference, President Lagarde was asked about the new Fed chair nominee, Kevin Warsh. She did say she knew him, worked with him, etc. When she was a finance minister, French Treasury. Uh, do you know Mr. Warsh at all in the years you've been working in this universe? And any opinions about how you might think the policy hand on the rudder might shift a bit. What do you see?
Well, I don't know him, despite the fact that I was vice president of the ECB and he was a member of the Fed board in Washington. So, but we didn't meet. I met several other members of the
Of course.
board, but not him during that period of time. So I don't know him well. I'll be cautious because I really don't know. What seems to me, nevertheless, a bit puzzling is the following. In 2008, 2009, at the peak of the crisis, he was sending and making speeches which sounded very hawkish at the time, and he gained a reputation of being hawkish then during the big financial crisis. But now he was appointed as a dove because that's what President Trump wants, and the acid test for selecting those four last candidates and then picking one out of the four seems to indicate that he was confident. I mean, President Trump was confident that the nominee would deliver in terms of cuts in interest rates and being more on the dovish side, perhaps. So we will see how it comes. Judging by some statements he made in the past few months, his main concern is with the size of the balance sheet of the Fed, and he said that it needs really to be shrinking significantly. Well, I think he will have a lot of trouble if he tries to do that. Because some of the risks that impend over the US economy are related with liquidity matters, both in the repo market, for instance, and also in terms of the amount of reserves of the banking sector in the US. Those were the reasons why recently the Fed stopped QT, quantitative tightening, and even started to increase the purchase of T-bills, as you know,
Hmm.
expanding so a little bit more the balance sheet. Uh,
Okay.
if that is totally reversed, there will be a liquidity squeeze that will create financial instability. So I am concerned with that dimension of what were his recent statements
Okay.
about the size of the balance sheet of the Fed.
Will you be pleasantly surprised if you find out that the first thing that Kevin Warsh does isn't cutting rates, that the first thing he does is get in office and see what happens and see what the data
Mhm.
do, etc. I mean,
Mhm.
think a lot of people make that assumption, but I think recently some Trump said
Oh,
something along the lines of that wasn't going to make it, he wasn't going to force anybody to cut the rate, that he was, so you think
well,
there's any chance of that?
yeah. Well, I don't know what really will happen. It also depends very much on the overall composition of the Fed board.
Okay.
Because, as you know, if the Supreme Court will allow President Trump to dismiss Lisa Cook, then that can lead to
Okay.
a Fed board where President Trump appointees, both in the first mandate and now in the second mandate, will have a majority in the board
Hmm.
of the Fed. that will change, I presume,
Okay.
a lot of things, judging by, the behavior of people and so on, around these
Well, okay.
perspectives. So if that does not happen, we have to be aware that the chairman of the Fed or the president of the ECB or whatever, whomever they are, do not take decisions alone on monetary policy.
Sure,
There
sure, sure,
is a
sure.
committee decision. So it is important to think about what will be going forward the
Right.
composition of the board.
Okay. Well, I want to move on to this paper you wrote for your macro views on
Yeah,
Substack.
yes.
And it's very critical of the current environment, particularly about policy actions in the US. You
Hmm.
entitled it Civilization Eraser. That's pretty strong wording, I should say. So what is it that worries you most about the emerging world order as you see it now?
Hmm. Well, the expression, I was playing with the expression civilization erasure because that is the expression which is used about Europe in the document of the national security strategy which the US administration published in November of 2025. So, accusing Europe of being in a path of civilization erasure. So I was, in a way, saying, well, it's not the case, but it is the case as a result of some of the foreign policy initiatives and decisions of the US. Because the main thing there, and the point I highlighted related to that title expression, is the fact that the US administration has gone back to a foreign policy of raw power and really not respecting or considering the so-called rules-based liberal world order that was put in place by the U.S. After the Second World War. It was very clear in the interview that President Trump did to the New York Times, saying, well, I don't consider the international law at all. I just take decisions according to my morality. And some of the decisions that he took during this period, since Christmas, by the way, were very striking examples of that. Like the military intervention in Venezuela, like other things, the bombing in Nigeria, and so on. So the civilization came when, after the Second World War and two world wars during the 20th century, there was a path, an attempt to build multilateral organizations like the UN, like the IMF, the World Bank, and all of that, the WTO, and all of that. And now the US has withdrawn from all those
Well, no,
organizations.
the U.S. is not involved from the IMF. The U.S. is not left the World Bank. They're still
No, no,
there.
no, no, not left. No, no, no. But it left 31 agencies of the UN. It also abandoned 35 international organizations that were not under the UN umbrella. So 66 international organizations were abandoned by the US according to the
Okay.
order that President Trump signed, and that is withdrawn from the multilateral world that was built after
Well,
the Second World War in an
well,
attempt in an attempt to have more dialogue among nations, and so less wars, less
well,
violence, and so on. And that backtrack movement to a more isolated and
well,
nationalistic policy is what I then
okay, okay. So,
consider
but yeah,
a
but
setback on civilization.
well, right. Well, Okay, to you, you see the setback in civilization. I would have to say though, look, the U.S. is still involved in a lot of things around the
Yeah,
world. It
of
has
course
not
it
gone
is.
from everything by any stretch. And I especially want to talk as we look at this with about Europe and what's the implication there.
Yes.
However, when I wanted to kind of look at the other side of your paper, I
Mhm.
went to AI and I asked it to compare and contrast your paper with remarks that were made in Davos by Howard Lutnick. He's U.S. Commerce Secretary, as you know.
Okay.
And I would say that what his difference is from you in one very basic way is you see this what you see this drastic shrinking of multilateralism, right,
Yes.
is something that's
Right.
bad and it's going to hurt the world. Now, from Lutnick's view, he thinks it's a failed policy. He suggests that the U.S. ability to negotiate favorable trade deals and foster innovation are a superior approach. That's just one part I'm pulling out of it. Why would you tell him, Mr. Lutnick, I think you're sincere, but you're wrong. This is a failed policy. He thinks it still works.
Well, uh, it's a policy which, of course, corresponds to what we just said. You just said. I didn't read his speech or the speech in Davos, but what you just said it means that what is defending a pure national interest policy, regardless of any effort to shepherd an international order where rules would exist and that international rules in WTO and so on, which the U.S. is breaching on putting first the U.S. national interest, and so the role of providing public goods for global public goods, which the U.S. Indeed delivered after the Second World War, has been abandoned. And that's bad for the world. That's what I'm saying. It may even be better for the US. I'm not discussing the issue from that
Hmm.
angle, but from the angle of the whole world order. This is bound to accentuate struggles among big powers. It's bound to increase conflicts and potential violence in the world. It's not a good development and contrasts with what was the civilization movement after the Second World War to build a new world order. That's
Well, a
my
couple
point.
things I'd like to ask you about from the past. For example, the U.S., Europe, people started having tariff reduction rounds years ago, right?
Yeah.
And a classic example of that, the negotiations got more contentious, and agreement was very hard to get, especially for the Doha round, right? So, in terms of is that fairly another area among some others where things did fail under multilateralism and that's I wouldn't say I don't agree with you that multilateralism. I think we still have a lot of it myself, and I know what the Trump eraser story was about. But I just think that what do you make about that? That what does that is that a reason why maybe some people, not just in the U.S., have felt that the multilateralism, some of these organizations don't always work, and certainly not for the U.S. And maybe that's a reason why the Trump team wants to step back.
Well, I think that the US benefited a lot from the multilateral global order that the US built after the Second World War. It had some costs also, of course, but on the whole, it benefited the US a lot throughout that period. So I don't see really the evidence that enables me to say that world order was detrimental to the U.S. I don't agree with such a conclusion. The U.S. also benefited. So the destruction of that order, it's bad for the world. That is my main point, and therefore bad for Europe and so on. But not necessarily better for the U.S. in my
Okay.
analysis. So that is my point.
Sure. Well, can I ask you though another question? I remember when first it was President Obama who pushed Europe to, hey, come on, pay your NATO obligation.
Hmm.
Then Trump, when he went the first time, the first 4 years, he pushed again and he pushed harder. And finally,
Yes.
look at Germany, the biggest, most
Yeah.
strongest economy in Europe. Prime example, would not start paying
Yeah.
NATO until they got
I know.
pushed. Do you think that's another one of those things
No,
that
that
has that is
that
go
was a
ahead.
good development and a necessary development. But that is nothing to do with multilateralism. It's a good movement because Europe needed to take care of its own defense as much as it can be done, particularly since the invasion of Ukraine by Russia. That was evident and was not being done, and now is being done. So that was a good development. No question in my mind. But that has not really to do with the global international organization that I was mentioning. Take the World Trade Organization. In during the first mandate of President Trump, the U.S. Did not appoint representatives for the settlements committee of the WTO, of the World Trade Organization, and paralyzed then the arbitration that WTO normally does. That, by the way, was continued during the mandate of President Biden. And then, of course, it continues now. And so WTO and its rules have been now totally breached by President Trump administration with the general tariffs that he decided, which are now going to be assessed by the Supreme Court, as you know. I'm not
Hmm.
referring to sectoral tariffs to particular sectors or products, which apparently the president has the legal authority to do on himself, but the general tariffs that he decided, which are under assessment by the Supreme Court. So it was a breach of all the rules of WTO and so on. So that sort of behavior is, of course, corresponds to that destruction of the multilateral
Hmm.
global organizations that I was referring to and criticizing.
So I'm just curious what you think Europe needs now. For example, um, John Cochrane, economist at
Yes,
Stanford, Hoover, et
I know
cetera.
him. I know him, of course.
Of course you do. Yes, of course you
Yeah,
do. And of course, he wrote this book with two
mm,
former
yeah.
ECB
Just one, but okay.
oh, that's right. Well, one was anyway, but
Yes,
John
yes,
and two
one
other
was,
people.
yes. Yeah, yeah, yeah.
And he is saying that that inflexible monetary policy can service local needs, lack of overarching fiscal authority. So is is this the issue? The what something that they need that of course it's hard. You brought a bunch of countries together, right? So it's hard to have
Yes,
one
right,
fiscal
right.
authority. That's one of the biggest challenges for the
Sure.
ECB. But is so in terms of what they need to do, what is
Hmm.
that? And what do you agree with something about that point about what
Yes. Well, of
ECB needs to do
course,
now?
yeah. Really, we know even by just a theoretical analysis that a monetary union cannot work smoothly and well without a degree of fiscal union, and that is missing in Europe because the the, the treaty itself, the basic treaty, does not give the European Union the competence on fiscal policy and tax policy and so on. The stability pact that exists in Europe was a intergovernmental agreement. It's not in the treaty. It's an agreement besides the treaty. And it works up to a point, but it's not, of course, even the beginning of a fiscal union. Puts some limits on fiscal policy of member countries in the interest of the
Mhm.
European economy at large, and also to help monetary policy, but it's not even an embryo of a
Mhm.
fiscal union. So that is missing. The other thing that is missing, and it's very important, is the capital markets union. Really a
Mhm.
much deeper integration both of the equity market in Europe and the bond markets in Europe, particularly the sovereign bond market in Europe, which is totally fragmented.
Yes.
So the capital markets union and an embryo of fiscal union would be necessary. And without those, by the way, particularly the capital markets union, of course, the euro is and will remain a very strong regional currency, but cannot have the ambition of becoming a global currency without that capital markets union.
So, do you think let's step back a little bit further again?
Yes.
You're talking about where the president has led the administration, led policy uh, for multilateralism being
Mhm.
left behind, if not, um, what when you look at Europe and US, because I think a lot of people in the world talk about Europe, and you mentioned, the growth is going to be fine in the euro
Mhm.
area, but it's not stronger, right? And
Mhm.
so, do you think that there's enough of what do I want to say, a separation, an opposition, or something? So EU and US going in different directions, that they have
Mhm.
less in
Mhm.
common? And is it
Mhm.
is it somehow getting too wide to repair?
Well, perhaps not too wide to repair, because the natural inclination of democracies is to work together, of course, and that was happening before. So that set of values are still there potentially, but of course, one has to interpret that the changes in policy in the US, particularly in international relations. Of course, it's also true about what is going on domestically, but I'm not commenting on that because that, of course, it's not. Well, it's our concern, but it's not our business really to go there. But we see with great concern the developments domestically, which everyone interprets as going into a sort of extension of presidential powers beyond what is foreseen in the Constitution, which is tantamount to a drive to a more authoritarian sort of society. So that we don't like in Europe, and outsiders in general don't like. In many respects, we don't recognize the U.S. anymore as it used to be, and of course, Americans know that. That's the view
Well, there
from
are
the
some
outside.
different
No,
opinions on
no,
a
no,
lot of
no.
these
That in
things in the
sense,
United
that's the
States.
view. That's the view from the outside.
Sure, and that's
But
what I'm
okay,
asking you
I'm
about.
not.
Yes.
I'm not referring or underlining that. I'm referring about the international policy, the foreign
Right.
policy, in a way that makes the U.S. a less reliable partner than it
Well,
was in
okay.
the past. So
Okay.
Europe would like to have more relations and better relations with the US, but now that the situation is as it is, and it's more erratic, it cannot be totally trusted. No one in Europe now trusts, for instance, that Article 5 of the NATO treaty would be respected by the US if Europe would be under attack. In general terms, no one in Europe believes that anymore. So you see, that's the reliability on the U.S. as a partner has been undermined very significantly. Can it be restored? I don't know. The future will tell, but that's the situation now, which means that Europe necessarily is to try to diversify many things and not rely
Okay.
as much as in the past in the US as a partner, and that implies several things. Although, of course, in terms of the possibility of the world order developing into an order of separate blocks, a Chinese bloc and American
Okay.
bloc. In that respect, Europe will always be closer to the US than to China. But that is a different thing. If the world is going there to a really fragmentation in blocks, right now,
Okay.
nevertheless, it's in the interest of Europe to diversify economically, and
Well,
that's what Europe is trying to do, of course.
okay. Well, I think you've raised a lot of very interesting questions in this article. In your macro views,
Yeah.
civilization erasure, people can
Hmm.
go right to Substack, find you, Vitor Constancio, and we'll see. This we're in the middle of a story, and we'll see where that story leads, right?
Oh, yes, of course. Yes, we are
Okay.
in sort of a crossroads in many ways about what will be future
Okay.
developments, and I hope people will read my old piece in Substack, which is for free, so
There you
it's
go.
fine.
There you go. Yeah, yeah, yeah. Okay. Well, look, Vitor, thank you so very much. We went over the
Thank
ECB
you.
meeting. We got a sense of
Yes.
what you see there, and certainly this more. Um, it's a big a lot of questions raised, and
Oh,
it's
yes.
good to hear your view. You've looked very closely into all these things, so look forward to seeing you again soon.
Yes. Thank you very much.
And of course, this is Vitor Constancio. He's the former Vice President of the European Central Bank. And I'm Kathleen Hayes, and this is Central Bank Central.